Good morning, everybody, and welcome to this fabulous 3-day event that we had going on for the last 2 days now. This is the last day where everything is going to be all about futures. This event is brought to you by Timing Research and Trade Out Loud. This event is being recorded. All the recordings will be available on the Timing Research website as soon as they will be posted. And David Cosmeter and I are going to be your hosts today. And I'm pretty sure you know that all information provided today is for educational purpose only. It should not be construed as investment advice regarding the sale of securities, options, futures, forex, or any instrument of any kind. With us today, we have again another fantastic lineup of pro traders that are really happy to share strategies, tips, and tricks with you. And with us today, again, we have Jim Simmons. Jim, you
Hello.
have the mic.
Awesome.
Nice to have you here again.
Yeah, thanks, Anka. Thanks for having me. Always good to be here. So, hello, traders. Welcome to today's event. A lot of really great speakers on the lineup today, so you're in for a real treat. What I'm going to be talking about today is supply and demand. This is literally the heartbeat of the market. The market doesn't go up or down without supply or demand. And so we're going to be discussing that. This is one of the most powerful things that you can learn in trading. If you can wrap your head around what I'm going to show you today, you will trade better. I don't care what you trade. If you trade order flow, support, resistance, if you're trading profiles, volume, I don't care what you trade. If you can wrap your head around what's going on with this, you will become a better trader. So here we go. So we're going to jump right in. And I am going to show you a proven trading system that works with a very high degree of probability. Okay, so we'll be going over that as well. So good stuff. So I'm going to dive right in for the sake of time. First off, our own disclaimer, we have no interest in the outcome of your trades. We are not your financial advisors. We are here to provide education, and products and services are tailored as such. There is risk involved with trading the markets. Please understand those risks and manage your risk accordingly. My name again is Jim Simmons with NeuroStreet. I am the Director of Trader Education here at NeuroStreet. I've been trading the markets for about 14 years on and off, and really over the last 5 years or so, 10 years, really started ramping up into becoming, making this as my living and becoming a professional trader. And so my encouragement to anyone who is participating in this event, name what you are, which is a professional trader, and then everything you do becomes about becoming that professional trader. Okay, so that's my encouragement to anybody. If you're struggling in the room here, you're having a difficult time, if your trades are going up, down, and they're never, you feel like you're never getting anywhere, you're breaking even, you're losing money, just hang in there, learn some of this stuff. And if I can be of any help to you to get you to the next level, please let me know. Okay. All right, so here we go. Our agenda, we're going to do some intro, supply and demand theory, volume imbalances, zone mechanics, reversal patterns, continuation patterns. How do we filter for the best trades, best locations, and the best zones? We'll look at a reversal trade and continuation trade. We're going to focus on, it's sort of a reversal trade, but you can use it as a continuation as well. And then live examples and special pricing. Okay. Again, I've already kind of done my intro. Really what my purpose in all of this, in becoming a part of NeuroStreet, was I had joined NeuroStreet as a trader first and went through their education, a lot of it, and started using their tools. And I just really enjoyed the experience so much that I thought, this is who I want to work for. So I came to work here. And so here I am. Supply and demand theory. Give me a second. I'm sipping on my coffee here at 7 in the morning here. I'm out west. So bear with me 1 second here. All right, great. So supply and demand, again, it's what drives the market. When you have supply and demand in equilibrium, that's where the execution of the purchase or sale or whatever the case, that's where it can happen, is when supply and demand are in equilibrium. Okay. When supply is greater than demand, price decreases because there's more sellers than buyers. And when demand is greater than supply, price increases because there's more buyers than sellers. And so we can look at this as from anything. I mean, you could look at this from, gosh, what were all the big things, right? Like you had the Furbies. You guys remember those back in the day? And then there was the Tickle Elmo. All these massive products that come out, and there's such a huge demand for them, and you can't get them, right? And then people are online hawking them for triple the price. Say you could do anything from, gosh, even Popeye's chicken sandwiches. I mean, we saw that. That was hilarious when that all, well, hilarious for some anyway. But really, the probably the best way to look at this is the housing market. I mean, we could see that the demand went up, and so furiously builders are trying to build more homes to try and meet that demand, and inevitably price goes up because there's a bidding war. There's more buyers trying to bid on the same house, and so the seller says, hey, I'll take the money. You guys want to fight over it? Great, I'll take more money. Okay. When it comes to trading, it comes down to the orders. And so let's say we have 400, we have 4 buyers, each of them have 100 contracts. This is just a super simple example. And we have 2 sellers, and they're selling for 100. Well, the buyers and sellers cancel each other out, and we are left with net buyers. So we have two buyers left over, and no sellers. And so what do you think price is going to do? Well, it's going to go up. And so that is a very, very simplified version of what's going on. And so we have a software that has created volume zones around volume imbalances in the market. And we can see these zones here on our chart that is referenced. I'm going to grab my little draw tool here. And so here's these zones. And within the zone, you can see the volume profile. Okay. Now, volume profile, I'm going to do a real quick rundown on what a volume profile is. Okay. You're all familiar with looking at the bell-shaped curve, right? You've seen this a million times. You see it in your economics classes back in the day, all sorts of things, right? Well, what happens is you want to be as a product, developer, seller, marketer, whatever, you want to be at the top of the curve because that's going to maximize profit. And this is where supply and demand are in equilibrium. That's where you're going to make the most money. And it comes down to units versus price, right? What this is doing is it's taking this bell-shaped curve and it's flipping it on its side. Okay, so now what we have here is we have the volume in the market that is taking place at each price. So let's say, this is the market, and you've got a bunch of bullish candles or whatever. So there's our market, and at each level, this is telling us how much volume took place at each price level. Okay, so we can see that at this level, the price was the highest, or the volume was the highest at this price. And so this is to tell us that there is sort of a balance of supply and demand at that level. That's where the most volume took place, the most contracts were purchased and sold. And so that tells us that price is in equilibrium. Okay, so what this is doing is it's showing us what the volume is at each level. And we can see that the highest volume is right here. And that is our point of control. Okay, it's called point of control. It's the highest volume. So this is important to know. The other thing that's important to know is where there's low volume. We want to know the extremes. All the stuff in the middle, it's not as important. It's good to know, of course, but it's not as important. In this situation on this profile, this is our highest volume. This is our lowest volume. And so that tells us a story, right? So price is going down. We can clearly see that it's pulling down. And then we get this little pullback right here. And then as it's coming down, it's trying to break the lows in here, okay? So we're trying to break the lows. And what we have is we have these candles that are kind of stuck, they're just kind of trying to fight, trying to push through that lows. Well, eventually they do push through the lows. And so what happens here is this zone is created on the basis of accumulation and distribution. Okay, so what's happening here is they're fighting over the orders. More importantly, what's happening is the big dogs are stepping in, right? The ones that we're chasing and we're trying to nip at their heels. They're building orders, they're building positions so that they can take the market further down, so they can make more profit. So that's really what is happening in that process. So what does this all mean to us? Well, this is a great location to place a trade based on this information, and we'll show you how that all works. Okay, let's go to the next one. It's just the opposite, right? This is just the bullish side of things. And so these would be demand zones. Prior was supply. So here's our demand zones. Then we have thrust bars. Well, what's a thrust bar? So thrust bar is going to be where when we break out of this sort of battle over price and battle over location, we've got this large thrust bar that pulls out of the zone. And this is to tell us that we have a large movement out. The volume was created. They fought over price and the buyers won. This is the most important thing. With this don't mean anything until you have this. Once you get that, that's what tells you what the bias is, okay? How is this helpful? Is it not true that this is all created after the market has moved? Hang in there, Gary. I understand your skepticism, but hang in there, because what I'm going to show you is going to blow your mind, okay? If you haven't learned this before, welcome to it, okay? So hang in there. I will show you. But you need to know this stuff before we get there, right? All right, so, and then in the volume profile, of course, we talked about, you've got the point of control. That's the most important thing that we're going to focus on today. If you want to learn more about volume profiles, definitely study it. It's really good information to know. Fresh supply, fresh demand. So if the zone is fresh, it will show up in bright colors. And that is just to tell you that the zone is still fresh and it is still untested and can be traded. Then we have tested zones. Okay, so once they're tested, they change color. And then we get this line that goes through to show us where the zone was tested to, at what point that it will, that it's been tested. Yeah, no worries, Gary. All good, all good. Thank you. Zone terminology, and then broken zones. Okay, so broken, they change colors again, because that means that they've been traded all the way through. All right, so there's two patterns that form supply and demand. There's a reversal pattern continuation, okay? Take a screenshot of this slide. Take a screenshot and I'll dive into it here in just a second. I'm gonna take another drink of my delicious coffee. All right, so reversal pattern, rally, base, drop, drop, base, rally. It's one of the most important things you can learn in trading. We have a rally candle, we have a base candle, and we have a drop. So there's a couple things that are required to create this sort of base candle. Okay, the base candle or the base zone, it could be even a zone. Really what we're looking for is for it to stall at the highs and do this kind of thing. In this case, what we're looking for on these candles is we can measure the body versus the wicks. In these candles, they have large bodies, and in these candles, they have large wicks. And so that's what the rally base drop is going to be. And then we have drop base rally. Excuse me. All right, we got drop base rally on the other side there. Okay, let's go to the next one. Continuation pattern. Take a screenshot of this one too. So in this case, it's going to be rally base rally or drop base drop. And this in the system will point out these levels for you. Drop base drop, rally base rally. Take a quick screenshot, and then we'll go to the next one. Okay, so here's what it looks like on the chart. All right, so we've got drop, base, rally. We got rally, base, rally, rally, drop, rally, rally, drop, 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 rally, base, rally, rally. We don't need to go through all those. Rally, base, drop, drop, base, drop. Okay. What the system is doing is it's wrapping zones around these imbalances in price. And there's another zone there. And you can see that the zones are being created. Well, what happens when this is tested is it drops out, comes right back to gobble up any leftover orders right there. Any orders that are left over, and let's say, the market makers say, I'm not done yet. I want to go get a few more orders, and then they drop the market. Okay? This works on, I don't care what you trade. It works on everything. It works on absolutely everything. Locating demand zones. So look at the chart. We're not going to go into all the details there. All right, quant volume scanners. I'm not going to get real deep into this in this particular session just for the sake of time again. But we do have filters built in that will filter out less than the average volume. So if it's less volume, it'll filter it out. Personally, honestly, I don't use that one. That's just a personal preference. Some do. We compare the volume at POC and volume average. Yeah, we've already talked about that. Yep. Thrust scanners. So this is going to only show us zones with a large thrust out of the zone. You can set it that way, or I can show you how to just visualize it. There's two versions of this software. One is going to be a little bit more intensive on your PC, on the CPU, and the other is a little bit more lean. And so I use the lean one. I don't feel like you need to absolutely use the full system. You can if you want, but I'm going to show you how to use it with the lean version, and I'll show you what would qualify the zone versus not, and I'll kind of give you the extra sauce, the special sauce, if you will. And then quant imbalance scanners. So this is actually an important factor. If you have price going up and then you've got base, because they're all about that base, and then it drops. And we've got like 10 bars in here, basing bars. Yeah, you don't want to mess with those because it's a little too much. It's like, what are we expecting? At this point, it's just too muddy. Stay away from those. So what we're looking for is 2 to 3 basing bars, ideally. You can get away with a couple more here and there. You just got to look at it and get a feel for it and what works for you. Initially, if you're starting to trade this method, I would only trade with 2 to 3 to start. Okay. All right, reversal zone. I'm going to actually skip through this because we're going to actually break this down on the chart and we'll go through it all together. All right, so how do you make money with this? That's the most important thing, right, Gary? We got to make money with this thing. All right, let's go check out some charts. Okay, so here is ES, our good friend ES, S&P Mini. Make this, oops, sorry about that. All right, there we go. So we'll do that. And so here's our chart, and this is from a couple days ago, just so that we can look at what's already happened first. Okay, so here's some zones, and let's just start to the left here, and we'll go through and look at what's going on. Okay, so we've got drop, base, rally. Yeah, rally, base, drop. Okay. And let's get out a notepad and we'll take some notes and we'll make some rules here as well. So let me just point out the zones first so that everybody can see it. Rally, base, rally, and that's kind of all a rally. Base, rally, base, drop, rally, drop, base, rally, base, rally. Okay, so there's our entire chart. You guys all see that? That all makes sense so far? Anybody got any questions so far? Everybody all good? Everybody's like in a trade right now. They're like, oh, I got to take this trade. Hang on. Time frame, yes. So this is a 9,000 volume chart. Oh, volume chart. Why volume? Because supply and demand is what makes the market. It's the heartbeat of the market. And you can't have movement without volume. Got to have liquidity to make the market move. Got to have buyers and sellers to make the market move. So why not trade it on a volume chart? This works really, really well on a volume chart. So 9,000 volume is going to be equivalent to roughly about 3 minutes. It's about a 3-minute conversion, which is what I like for this particular software. Love trading it on the 3-minute and preferably the volume on the 3-minute. Okay, so ES 9000 volume is what we'll trade this on. And so let's look at our first zone that we have here. So we have a drop, base, rally. Okay, so what we're going to do with this is once price comes back into this zone, we're going to take the trade here. You see where the volume is kind of like, it's really low, kind of low, and then whoa, tons of volume. Okay, so this is where we want to kind of put our line in the sand and say, when it comes into the high volume, that's where we want to take the trade off the high volume. More importantly, how many of you are familiar with market structure? Okay, so we've got, when we look at market structure, a change in structure would look like either this, and on the short side, it can look like that. Okay, so where is structure broken? Structure break here, structure break here. As soon as we break the low pivot, then structure is down. Okay, so the market is going down. In this case, we created a zone on a pullback. So our structure's up here. There's our impulse. There's our pullback. And there's our impulse. And we created a higher high before we came back into the zone. And that's powerful because the market is telling us that it's still long bias. So it makes perfect sense for us to get in right here and take that trade back to the upside. And it works very well. Yeah, so the green, or they're green until they're broken. These bluish zones, blue, green, whatever they are, those are demand zones. Okay, so those are bullish. These sort of purple ones that are actually red when they're fresh, those are supply zones. So those are bearish. Okay, so what you need to know is trade these long, trade these short. Okay. Good, good. Now this zone, I love this zone right here because it's very clear. Drop, base, rally. The base is not very big. It's not like this giant long wick and then tiny little body up here. And that would be bigger than the other candles. Okay, so it's a small-ish candle. It's not real big. The wicks are big, which is great. And the base, or the rally and the drop, are very clear. More importantly, the rally closed way above the wick of that base. That is important. You see how this one, we've got a wick here and here, and it failed to close below that wick. And so what happens? It gets tested right away. Now, I'm not going to tell you not to take these trades, but if it gets tested right away, that zone is off limits. As someone who's maybe new to trading this, I would not trade zones until they have proven themselves with a strong move out. And I'll show you what that all looks like. Okay, so let's get our notepad and let's take some rules. So we're just going to look at the bullish setup, and then you just reverse it for the selling, right? We'll look at bullish. Okay, so we need a demand zone, and we need it to qualify. So we need drop, base, rally. Oops. We're going to look at drop, base, rally only. I'm not going to show you the rally, base, rally zones. Here's a rally, base, rally zone. I'm not going to show you that in this lesson because it's more complicated. And this is the easiest way to get started in trading something like this. Okay. So drop, base, rally is what we're going to be trading. And then we're going to trade back into the zone. And we're going to trade it at high volume. Okay, and we're going to frame the high volume. So when this zone is created, move that over there. When this zone is created, what we're going to do is we're going to wrap a zone around this. Now you say, well, there's already a zone. Yeah, I know. But I just like to be overkill. All right, so here is our high volume in this particular case. Well, it's kind of a big zone. You can put your stop below the low and then just run it back up. Personally, what I'm looking for is like pockets of low volume in the zone. You can see this one, this is where the volume clearly drops off. So if you were drawing a zone here, that would be the zone. We're going from high volume to high volume. Sorry, you can't see that color. Okay, high volume. Oops. Bear with me here. My hotkeys don't work because I'm taking video. High volume to high volume right there. So that's how we would frame the zone. And then what we do is we just simply take the trade at the edge of the zone, maybe front run it by a tick just to be safe. Make sure you get filled. And then stop's going to go below the low. And then whatever you trade for our multiples, that's up to you. I trade 1-to-1, our multiple, meaning that for every, the risk and reward are exactly the same. Okay, 1-to-1. So we can see that this zone very quickly gives us the target because it's a clean zone. Okay. So we want kind of the filters. We want clean rally base or drop base rally in this case. Okay. We want it to be clean in and out. We want the base no more than 3 candles to start. So you get the feel of it. No more than 3 candles. So we can see here, we've got 2 basing candles and we've got 1 basing candle. We've got 3 basing candles here, 1 here, so on. So no more than 3. We need, and this is probably one of the most important starting out, the thrust bar or the rally out must close above wicks of the base. Okay, so this one closes above the wicks of the base. This one does not. Now we're not looking at rally base rally right now, but you get the point. This one does not close below these wicks. So I don't want to trade it. So literally what I would do is you can actually click on the zone and you can get rid of it. You say, I don't want to trade drop base drop. I don't want to trade rally base rally. I'm going to keep that zone. I'm going to keep that zone. I'm going to get rid of this. This is a clean drop base rally. It got tested right away though. And I don't like trading those zones as much, especially if you're just starting out trading this. This one, as soon as it came out, came right back in. Does it work? Yeah. Yeah, it worked. That's a winning trade right here. You can trade that right here. There's your trade. Now it gives you a lot of heat. That's the problem, right? So, and this is kind of middle of the night, so it's kind of an awkward time to look at this, but just kind of showing you the idea of how it works. Okay. So let's make sure we got all our rules down. Drop base rally, trade it back into the zone at high volume. We're going to frame the high volume. We're going to front run by 1 tick. And then stop goes below the low, goes below low volume. And then target equals, it could be 1-to-1, 2-to-1. Here's the thing. It's got a very high win rate at 1-to-1. Like you could expect to see, once you get the hang of it, you got to practice, you got to get into the trades and make your mistakes and all that. So do it in sim first, but you should see at a 1-to-1, you should be hitting about 65, 70, 75% win rate on this. Now that's 70% is over 2.0 profit factor. So it's very strong. If you trade it this way, don't get cute, just go with it this way. And I'll even put in here, ES 9,000 volume. Now that changes based on the ebbs and flows of the market. Volume's high right now, or at least it was until summer. Everybody good so far? Any questions so far? Everybody hanging with me? No questions. All right, you guys are quiet. All right, drop rally base rally. So there's no zone around that. Rally base rally, not looking at those today. Get rid of them. Rally base drop. Does it close below the wicks? Yes. Okay, so where's our zone? Data feed, doesn't matter. Doesn't matter. I think this one's continuum, but you could use rhythmic or kinetic, any of them. It doesn't matter. Let's do that. All right, so here's where the high volume is. Yeah. The highest volume is in here. We can see where's our point of control. That's obviously our highest volume. And then, yeah. So where would we take this trade? Well, once it closes out of here, this zone appears and we're bullish bias. Yes. Market's going up and to the right. So if you are, excuse me, if you're trading this short, you are trading against the flow of the market. Understand that, because that's important. Now, I'm not going to tell you not to take the trade. I'm just going to tell you that if that trade doesn't work out, get out of the trade as fast as you can, because there's no sense in trying to hold on and wish the market will move in your direction. Now, this trade works, but if you're going to trade counter trend, know what you're getting yourself into before you take the trade. This is counter trend. Wouldn't it be better to take this trade? Drop base rally. Now there's no trade yet, but I'm just saying that's probably a better zone to trade. So let's move this down and let's say, okay, here's our zone. Drop base rally. Let's get rid of that one. Get rid of that because those are rally based rally. We're not looking at those right now. Drop base rally. Strong rally out. Does it close above the wicks? Yes. Okay, so where's our zone? Our zone of high volume is right here. Sorry, that color is not working for me. I'm going to go in and change the colors on this real quick, just so that we can see what the heck's going on, because that is not working for me. Let's go to like something obnoxious. Let's make it like here. Let's do yellow. Yellow's good. Yellow. Okay. And then let's just save as default. All right, good. So now we've got our yellow zone. Okay, now we can see what the heck's going on. All right, so we're going to move this right here. There's our high volume. There's our high volume. Trade's going to go one tick above right here. Stop's going to go in the low volume. And there's your trade. Takes some heat, but it's a profitable trade. Cool. And now we're in like regular market territory. What about this zone? What do you guys think about this zone? Is that a good zone? Why or why not? Let's see if anybody's paying attention here. What's up with this zone? Would you trade that zone? Anybody interested in taking a trade in this area? Yeah, it's too wide. Yeah, it's too nuts, right? It's like it's up, then it's down, then it's sideways, then it's up, then it's sideways, and it's up. It's too much. Yeah, it's too much going on in there. So we're just going to get rid of that zone because it's not clean. It's not a drop base rally. In this case, we have rally, base, kind of a rally drop. This to me is not clean either, but here's the thing. It clearly rallies out. And what happens right here? You guys see that? So it has broken through the low of the previous pivot. So now structure is down. Structure's down and we're now bearish bias. This zone was already traded, so I'm going to get rid of that so we don't get confused. So we took a trade already in this zone. Once you only trade the zones once. That's an important rule tool. Let's add that in there. Only trade zones once. Very important. Okay, so we already took the trade there. We've got a rally base drop, but what happens here? Does it close below the wicks? Nope, it does not. Doesn't really ever come out. And then what happens is that zone is tested right away. And it does work. If you want to be aggressive with it, you can take a trade right into the zone right away, but you just risk taking on a lot of heat. And when you're sitting in the heat like that on every trade, that's enough to make a trader go crazy. We all know that we're dealing with emotions and bias and all this stuff as traders. Wouldn't it just be easier to take the best zones and only take 2 trades a day versus taking every zone and taking tons of heat on half your trades and making you go crazy? Like, it's just not worth it. Filter out for only the best of the best of the best. Your job is not to take every trade. Your job is to take winning trades and manage risk. Okay. So drop base drop, we're not looking at those today. So I'm going to get rid of those. Drop base drop, drop base drop, drop base rally. Does it close above the wicks? Yes. How many basing bars do we got? 2. I'm going to show you something here though. The base is really large. Trade smaller base zones. So here's what I mean. So I'm just going to put a rectangle around the base from here to the bottom. Okay, so that is the amount of range in the base. Well, let's go to our drop in our rally. Do you notice how the base is bigger than the rally and the drop? Like, the base is just too big for me. I don't want to trade that zone. I'm not interested in it. Let's see if it works, just because I'm awfully curious. Where are we at here? Here, let's do this. We're just going to draw a line in the sand. Let's do that. Okay. And let's zoom out. And let's see what happens when it comes into that zone. Some reaction, but is it enough to take a winning trade? Let's see. Your stop has to go here. Barely. Do you see how it like barely goes up anywhere? Now this is, this is like late evening, so who knows what's going on there. But it's just not worth it. Like, that zone is not valid to me because the base is too big. So personally, I would not trade that either. And so there could be another filter. Trade only the smaller base zones. And we'll just put a side note. If the base is larger than the drop and rally, don't trade it. We'll just do that. Okay. What about this zone that we plotted? So that was a zone. Now this is from the day before. Let's go in and check it out. There's our zone. Did we get enough to take profit on that? No, probably not. Let's look at it on the 1-minute chart. Where are we at here? Right there. There's the trade. Still profitable. And this is like late evening. Who the heck knows what's going on? You're probably not trading it. But this is just to show the power of how powerful these zones really are. And if you can wrap your head around what's going on with this stuff, there is money to be made with this. Okay. So we're good. So we looked at some zones. We looked at the rules. So we'll go back here and we'll just kind of go back to this trade since that was the first one we looked at. Let's get rid of this and just clean up our chart a little bit. And then I'm going to put this back here. All right, so those are our rules. Let me just double check and make sure we're not missing anything. And then you can take a screenshot of this, and this will be a trade strategy for you. Trade back into the zone, high volume, drop base rally that we have. Frame the high volume, front run by a tick, stop goes below the low volume. Target 1-to-1. Got to have a clean drop base rally, no more than 3 base candles. Thrust bar must close above the wicks of the base. It's important. Only trade the zones once. Trade the smaller base zones. If the base zone is larger than our rally and our drop, probably not a good one. Let's size it out on this one. Let's just see. Do you see how it's not as big as the rally and the drop? Zone mechanics, right? Like, trade the best zones. Don't trade all of them. Just trade the best ones. That's it. Simple enough, guys and gals, and traders. Simple enough. That makes sense. Good stuff. How many of you are levels traders? We got like some support resistance traders in the room. It's a little fast. As far as the trade setup, too fast to get into it, you mean? Yep. We've got this recorded. If you need to watch it again, watch it again. If you're a support and resistance trader, this is a killer trading setup. Killer. Because it's consistent. It works, and it works on everything. I think I had the question like, does it only work on futures? No, it works for everything. If you can get volume on the chart, it works. I don't care if you trade Forex. I don't care if you trade lean hogs. I don't care if you trade maybe cryptos. I don't know about that one. I don't know about that yet. But Forex, futures, stocks, options, doesn't matter. Supply and demand is supply and demand. It doesn't matter what you're trading. That's the beauty of it, because it works in every market. I don't care if you trade cheese. Those are the rules. Cool. All right, let's go back, and I've got an offer for you and examples we just looked at. What about our trade room? We have a trade room that runs from 8:30 to 11:30 Eastern time, Monday through Thursday, with a win rate average of about 77% at a minimum of 1-to-1 par multiple. Those are real trade room results based on the strategies that we're trading in the room. Very, very strong performance. Our trade room moderator is a beast of a trader. Probably one of the best I've seen, if not the best. Very, very good. Okay. Our software is available on several platforms. This particular software is available on NinjaTrader and TradeStation. NinjaTrader and TradeStation. But we have others. Okay, so what comes included in our indicators package? Well, you get education, because we're not just going to give you all the indicators and say, all right, knock yourself out, go use them. You got to know how to use them. You got to know how to trade with it. You got to go through strategy training. So there's education. And if you're new to trading, we've got education for you too. It's all built into there. Live trade room we just talked about, and then software and indicators. Well, what software comes with? So this is just one of the indicator softwares that we have available. And it is right here, SDV system. So that's one. Well, there's just a few more. There's like 40 to 50. There's a lot. There's a lot of stuff available. Anything that you need, we have it. The zigzags that you saw in the chart, we've got that one for you. So you can look at market structure quickly and efficiently without having to draw lines on your charts. Macro profiles is our volume and TPO volume profile and TPO software. VM system is a momentum indicator. Print profile is an order flow suite. Frequencies is a mathematic harmonics ratio trader. VSA is volume spread. Golden Fib system based on Fibonacci confluence. Like, we have everything. Really, really killer stuff. Trade alerts, some of them do have trade alerts, like trade signals, I should say. And then you can set it up as an alert to where it, beeps at you or whatever, that sort of thing. Who is it for? We've got a little something for everybody. Beginner, intermediate, pro, doesn't matter how long you've been trading, we've got something for you. We've got pro traders that use our stuff, and they build strategies around this stuff, and it's really good tools. Reviews, we're very, very highly rated because we take care of our traders. If you need support, you send us a support message, and lo and behold, we actually get back to you. Here's another thing that is a little bit rare these days, which I know you'll appreciate. If you need to call somebody, you can actually talk to somebody on the phone. I know it's hard to believe, but like, if you need to set up an appointment, we'll set up an appointment with you. For those of you who are international and kind of weird time zones and such, if you need to call us, we got you. You need help installing your indicators, we'll install them for you. We'll actually get on your computer and install them. You cannot expect to get further in this business unless you've got a little help. Like, this is a tough gig. Discord, we've got our community chat rooms. We've got threads on, gosh, everything you can think of. And we have traders that are collaborating, sharing ideas, sharing trades, pointing things out on the charts. Really, really vibrant community. Thousands of traders, thousands and thousands. All right, so what comes with intro courses, trading education, indicator training, strategy training, live trade room 4 days a week, 7 top tier system indicators, $69.95 value. That's a real value. That's not like we used to sell these indicator packages one at a time, and that's what they were selling for, $750 to $1,500 ish. Total value 27,000, but you're going to get Discord community chat rooms, 44 total indicators on 5 platforms and growing. I think we just added 2 more. Trader resources and downloads, workspaces and templates. We'll give you all the workspaces and templates. If you want the one I'm using today, email me. I'll send it to you. Remote install. You want us to install it for you. Product training workshops. I did product training on every indicator system. So there's product training on each one with strategy. Okay. Total value is $70,000. You do not have to pay that. It's summer. Why not give you a break for the summer? Okay, this plan is quarterly, $495 for the quarter. Come and go as you please. If you want to stick around for a quarter and take a quarter off, it's fine. If you want to come and go and you're taking some time off to go travel, whatever the case, totally fine. You can come and go as you please. So here are the links. I'm going to post them in the chat box, and then you'll have it. Any questions on any of this? Anybody have any questions? Where's my link? There we go. Okay, I got 2 links for you. Quarterly is $495. Annually, if you want to do annual, it's just 3 times the quarterly. So you get 1 quarter as a break. You get more savings. Okay. Value 1047. There you go. For less than your vacation, we can give you a trading career. Okay, you got your summer vacation planned. You're taking the family to Disney World or something. I don't know. It's going to cost you less to do this. We've all spent money on tons of trading junk, bells and whistles and gadgets and all sorts of stuff. Okay, this is not just a gadget. You're not spending money on just one indicator. You are getting an entire package full of indicators, and you're getting a trade room, and you're getting education. And this education, if you can find someone who offers more education than what you get in this package, I will be seriously impressed. The other outfits out there, though, they're not charging $495 for this education. They're charging $5,000, $10,000, $15,000 for this stuff. You're getting it for $495 quarter. So really good opportunity. If you have any questions, let me know. Do you guys want to geek out on some charts a little bit more? Brokerage, it's up to you on your brokerage. If you're trading futures in NinjaTrader, you're a little bit more limited on your options. NinjaTrader has a brokerage if you're US based. If you're not in the US, then you can use your brokerage. You just need to see if you can get access to use NinjaTrader with your brokerage. So like a couple that are an example would be like Interactive Brokers or your TD Ameritrades, those brokers. You can use them in NinjaTrader, just a little bit more complex. But if you need info on that, feel free to message me and I can go over some options with you. You know what I mean? There's my email. I'm still in all caps. Good. We've got a few minutes. Do you guys want to go take a look at some active charts? We'll go check out and see what's going on. Let's go back here. You guys want to go check out some charts? If nobody says yes, I'm not going to do it. Yes. All right, Mark. Let's go. Let's go. Let's go. Okay, let's see what's going on. Whoa, choppy, choppy, choppy. Anybody take any trades yet today? How many of you are in a trade right now? You're like, oh, I wasn't listening to you, dude. I'm taking a trade. I'm just here for the free popcorn. Took along. Nice. Yeah, choppy. You know what I see when I see this? I see opportunity. I'm like, all right, hey, well, they're not going to just like take out my stop and go for a run, you know? I hope the L is for a long, not loss. Tesla. I don't have data for stocks, Ghana. Sorry, I don't have stocks data, just Forex, or I mean just futures for me. Yeah, in this particular setup. All right, so let's take a look at some of these zones. So we had a rally, base, drop. but it's showing it as a base. And then here's our drop out. Sketchy, definitely a little bit sketchy. Does it work? Yeah, absolutely it works. Let's go in and put our zone in. So there's our high volume. And there's where we would take the trade right here. Stop would go above that. There's our trade right there. Winning, 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 winning trade. Okay, so we're good there. So let's get rid of that. I can't actually because I can't select it. Time frame, we're still on the 9,000 volume chart. Drop base rally. Is that clean or what? Like that is a beautiful, beautiful zone. Where's our volume? We're going to go from high volume. Really, the whole thing is it's kind of like a D shape, capital D shape. In this case, I would just front run the zone because that's kind of all high volume. So you just go here. All right, let's front run it by a tick. And then stop goes below the low. And then there's your trade right there. Okay, another win. Now, these are like these are from like 9:30 to 10. So it's kind of off the market open. So it's a little bit crazy. You probably don't want to trade at that time. Maybe some of you do. I don't know. Is there volume charts on TOS? I imagine there has to be. There's got to be. I mean, you can't use this particular software on TOS, but you can certainly chart it with Ninja and then you use it on TOS. Or if you're using volume charts and you just want to kind of do it manually, absolutely. Yeah. I'm sure there has to be. I don't know for sure though, because I haven't traded on TOS, but I imagine there's got to be. Drop base drop. So this one doesn't count. So we get rid of it because we're only looking at drop base rally, rally base drop. Okay, so we've got these two zones covered. What about this guy down here? Drop base rally, sort of a rally, but not really a rally. And then this giant sort of rally out. Could we trade it? Well, let's take a look. Let's measure it out. So let's go to our base, starts here and goes all the way up here. Is it bigger than our drop? No, just barely, no. And it's not bigger than our rally. It's a giant base, giant. But it does work actually. Stop's gonna go below the low. There's your trade. Winning. You guys like taking winning trades? I know I do. Rally, huge base. Not even remotely interested in that. Like not even close. Drop, huge base. Not really interested in this one either. Okay. So we've got 3 winning trades, depending on what time you start. But I mean, this is like 7, but the trade doesn't happen until 9:30. So if you're starting your day at like 8:30, I don't know when you guys start trading. There's 3 trades. They're all profitable. This is just a killer way to trade. Like even if you don't trade, what happened to my? Oh, that was weird. Ninja just crashed. How about that? Fun times. Good thing we're done with it. So yeah, great way to trade. It doesn't matter what you trade or what strategy. If you can learn the rally based drop, drop based rally, and see it on the charts, you're doing better than a lot. If you have automated software as well, we do have some algos that we've built. We've got more coming. I would hold off on those, honestly. Like the ones that are coming, I think are going to be stronger. No offense to the other ones, I think they're fine, but the new ones are going to be great. We've got one coming out that's kind of trading with order flow, but you don't need level 2 data, which is great. So good stuff, guys. Anybody have any other final questions? We are just about done on our time. Anybody have any questions? Yeah, let me post the link again. There you go. If you get involved in this and you need a little help, reach out to me. Happy to help. There's the rules. I'm going to save this. So if you want me to send that to you too, that's totally fine. Let's do SD trade. I'm going to call it rally based drop. Oops. There we go. All right. So I've got that saved. So if you need it, send it to me. I'll send you the workspace as well. I think that's about it for me. David, are you there? Let me turn it back over to you so we can get ready for the next speaker.